Dipan, stay on. I don't know if you track these packaging companies, but I do want your thoughts here because AGI Greenpack, which was earlier known as HSIL, as we know, this is a packaging company. They're into packaging products, glass, PET bottles, etc. The results were quite good actually on a low base. So it was a strong set of numbers, revenue growth of 66%. EBITDA margins of 16.6% despite a sharp increase in input prices. Sandeep Sikka, who's the Group Chief Financial Officer at AGI Greenpack, joins us now to talk about that. Sandeep, good morning and thanks a lot for joining in. You know, earlier you had guided for 1,800 crores of revenues by the end of FY23. In the first half, your revenues are about 1,034 odd crores. Are you confident of meeting that guidance, and what could the second half look like?
So, if you see that we did in the first half itself 1,000 crore, so we are fairly confident because generally second half for us is much better than the first half. So we are fairly confident we'll cross the value of 1,900 crores, going forward on AGI Greenpack.
Okay, and what about your margins? What would it be? It was around 17% in the last quarter. What is the outlook on margins? And if you're saying second half of the year is better, then you should do more than 2,050 crores, right, for the year?
Yes,
So 2,050, can we work with that?
Yes, it should be in that range itself. Because if you see, Nigel, in the last 1 year, input prices have increased substantially.
Okay.
And the guidance is based on the current market prices of the input, like fuel has gone, increased year to year substantially, but it has come down slightly now.
Okay.
But other raw materials like soda ash is still, the prices are very strong.
Okay.
So average price realization in 1 year, we had to talk to our customers and increase the average price realization to maintain the margins. Like last year, we were running at an average price realization of about 27,000 rupees per ton, which currently is in the range of 35,000 rupees a ton.
So Mr. Sikka, Mr. Sikka, so we should work with around 2,000 crores. Is that fair, going by current prices? And you did 1,030 crores odd in the first half of the year. 2,000 crores is fair?
Yes, please.
And margin should be what for the year? You did around 17%. You were indicating that it's likely to go up. So what is the outlook on margins? And also you had an expansion that was coming on stream. Has it come on stream? Is it delayed?
It is slightly delayed in terms of the commercial production, but in terms of the margin, we expect that the margins should be maintained. We had also given guidance that with the new capex, which is a high value added, there should be incremental 1% margin, and we still maintain that. The product has started selling from that, but it is still under the trial run. The customer is validating the quality because this really goes to the high-end customers. So we feel that another 3 to 4 months we should be able to start the commercial production for that 154-ton high-end furnace.
Okay. Can you tell us a little bit about the market share? I understand that you do have a 20% market share in the organized glass packaging industry. But are you seeing a shift from unorganized to organized? And what does the market share stand at currently? What is the year-end target?
So if you say just pure glass, then we are in that range. But actually what we are serving is an overall liquid packaging market. So we are there in glass, we are there in PET, and also security caps and closures. So overall market share should remain the same going forward in the medium term.
Okay. And sure. So the market share you're saying is around 20% itself across the board, right? Across all segments?
Not all. It's primarily for glass. On the PET, we are a small player right now.
On the PET, you are, sorry?
Small player.
Small player. Okay, so for glass, it's 20%. Got that. And, 75% of your revenue comes from alcoholic beverages, 16% from FMCG, and 9% from pharma in terms of packaging. Will that be the way forward as well? Are you looking to sort of branch out into newer segments? And what will the revenue mix look like, say, a year from now?
Going forward, our focus is more on food and pharma sector right now, so that we are able to do a shift of around 10% from liquor and beer to food and pharma, because the average realization in that segment is much higher. So that's one of the strategy to further unlock the margins, the potential margins which we can do. Okay. So the focus going forward is also food and pharma.
Okay, all right. Mr. Sikka, besides the results, there's a very important announcement that you've made on the exchanges with regard to Hindustan Glass. Now, this was in the works for a while, and you have said the corporate debtor, well, they have approved the resolution plan, and they've declared AGI as, the top bidder. So congratulations on that. But we need more details on this front. Because reports were suggesting that the total money that you will be putting up for a bid was between 1,500 to around 1,800 crores. Can you give us a number or a range at least?
Nigel, we have a confidentiality agreement under the IBC.
Okay.
So I'm sorry, we are constrained by the confidentiality agreement not to divulge the numbers right now.
All right, Mr. Sikka,
That's
that's fine, Mr. Sikka, but it will be more than 1,500 crores, because
Yes.
it will be more.
Yes.
How do you fund this then? If you could give us a split between equity and debt, will you be tapping the markets or will it be debt? Your debt is already around 800 crores, which has come down.
So primarily we'll start with the debt, and
Okay.
then we see a good potential in this asset going forward. And there can be a lot of upside on the equity side, and we'll raise equity over a period of time.
Okay.
But initial acquisition we will do with the debt.
So can we work with 2/3 of this funding will be via debt and 1/3 will be equity? Is that a fair assumption?
It will still more. We'll start almost 70-80% with the debt.
With the debt. Okay. The other question that I had is you just told Sonia that you have 20% of the market share. I believe even this unit will have a fair bit of market share in the glass segment. Will it run into CCI trouble?
So primarily, Nigel, what we are doing is, as I said, we are not only into glass. What we are serving is the overall liquid packaging market. And market potential for liquid packaging is the market size itself is 32,000 crore.
Okay.
And it's because if you see today, liquor, beer, even any of the food products can be packaged either in glass, PET, or
So you believe,
can.
Mr. Sikka, that you'll get through the CCI muster, right? You'll pass it.
Yes.
Okay. Final question from me then. The potential of this business, what is the revenue potential? I believe it is around 500 crores per quarter. Could you clarify at optimal levels, what can this business do that, Hindustan Glass that you'll be taking over? What revenues can it do and rough margins that it can do? Very quickly, sir.
I can give guidance today on the revenue side today, they are doing about 2,000 crore of sales. And given the fact that we'll do, we are doing at 1,600 tons per day, we'll be clocking 2,000 crores. So the market potential is about 2,600 crores right now as we see. But margins as we see, we'll have to see how the things pan out.
But you had also said that you're focusing now on the food and pharma sector because average realizations are much higher there. And you'll be shifting 10% away from alcohol to food and pharma. So in that context, the margins could improve, right? Once you, and if yes, how much could the average realizations and margins go up?
So average realization for us on the food and pharma sector is generally 8 to 10% higher than what we do on the normal liquor and beer. So, but given the mix, so overall, we feel that 0.5% to 3/4% we should be able to unlock on the value on this.
All right. So thank you very much, Mr. Sikka. Appreciate you joining in and running us through all of that detail. So that is an interesting company, glass containers, glass